Welcome to today's market report. European stock markets are seeing opening higher on Friday, helped by a late recovery on Wall Street, but concerns remain about the regional economic recovery as the number of the coronavirus cases continue to rise. DAX future this morning traded 0.% higher, CAC 40 climbed 0.4% higher, FTSE 100 in the UK rose 0.4%. On Wall Street overnight, Dow Jones closed 0.2% higher, S&P gained 0.3%, Nasdaq added 0.4%. Small gains, but this represented a recovery after weekly unemployment data had disappointed. The strongest sales of single-family homes in nearly 14 years in August helped to revive some faith in the recovery. Adding to the renewed confidence was talk that Democrats in the US House of Representatives were looking on a $2.2 trillion coronavirus stimulus package that could be voted on next week, and that House Speaker Nancy Pelosi reiterated she is ready to negotiate on it with the White House. More stimulus is also likely to be needed in Europe after this week's activity data showed the recovery stalled in September as the resurgence of COVID-19 hit the services sector particularly badly. French Prime Minister Jean Castex warned that the government could be forced to reconfine areas if the number of cases did not improve in the coming weeks. His government had already announced extra restrictive measures on Wednesday, mainly in big cities, to contain the disease. Evidence is mounting that the rebound is not just fading, but also potentially revising, despite National Service of Business confidence from Germany and France were stronger than IHS Markit's PMIs had suggested earlier this week. In corporate news, BMW may be in the spotlight after the German luxury car maker agreed to pay $18 million to the Securities and Exchange Commission to settle claims that it had disclosed misleading sales figures. In the UK, fast fashion group Boohoo published the conclusions of its review into supply chain issues that had knocked its share price badly earlier in the summer. Oil prices traded largely flat as renewed hopes for more stimulus measures to boost the UK economy were balanced by persistent concerns over demand. Crude future traded 0.1% lower at $40.29 a barrel. Brent was flat at $41.94 a barrel. Brent is heading for a drop of over 2% this week, while US crude is on track for a decline of around 1.5%. Gold futures fell 0.3% to $1,872.20 per ounce. On the FX front, Cable is seen attempting a consolidation move ahead of a potential drop to the mid-126 level. According to the UOB Group, the pair is now trading at 127.90, holding steadily awaiting for fresh impetus. The pair bounced off 126 region as the bull-bear tug-of-war extends amid a stall in US dollars rally and cautious optimism. The market mood remains cautiously optimistic amid hopes over a UK COVID-19 late-stage vaccine trial and US stimulus deal, which limits the bounce in the US dollar across its major peers. The dollar index trades modestly flat at 94.37, having partially recovered from the New York lows to 94.20 reached amid mixed US data and Wall Street bounce. The cable once again attempted a modest recovery after the UK's Finance Minister Rishi Sunak rolled out measures in its job protection scheme as the country battles the second wave of coronavirus-induced restrictions. The unexpected jump in the September CBI Distributive Trade Survey on realized sales also offered some reprieve to the GBP bulls. Meanwhile, optimism over the post-Brexit transition trade deal also aided the rebound in the major from two-month low of 126.70. Euro-dollar pair is currently trading at 116.75, representing a 1.4% decline on a week-to-date basis. This is today's market news. Thanks for listening. We'll see you next time.